Dear viewers, welcome to our channel. Today I am going to discuss about Indian Overseas Bank exam 26/9/2020 scale 4 to 5 recalled questions. Scale 4 to 5 recalled questions exam dated 26/9/2020. Now, first question on the screen is interest coverage ratio calculation. Interest coverage ratio calculation. Earnings before interest and tax divided by interest payment due for the year. So first you have to know what is the formula for this interest coverage ratio. Earnings before interest and tax divided by interest payment during for the year. This ratio is used to determine how easily a company can pay its interest expenses on outstanding debt. I think this question is from the loan policy of the bank. Loan policy. Normally 1.52:1. Some banks they are considering 2:1. Some banks 1.6:1. Higher the ratio is best. If a ratio is higher, the bank cannot face any liquidity problem in repayment of interest to the bankers. So this is about the interest coverage ratio. Question from the loan policy. This is also question from the loan policy. Second question, debt service coverage ratio. Debt service coverage ratio. Net profit after tax plus depreciation plus interest on term loan divided by interest on term loan plus installment of term loan. This is the ratio as per the loan policy. Each bank is prescribing some average DSR ratio is 1.5 is to 1. Now, every year during the project loan or term loan, every year you have to calculate the DSCR, and after that you have to calculate the DSCR average also. So average DSCR is normal in all banks 1.5:1. It means every 1 rupee repayment of installment or interest, earnings must be 1.5:1, 1.5 rupee. So with from 1.5 rupee, they can pay the interest and installment obligation. Remaining 0.50 paisa, they can run the business without any liquidity problem. This is about the debt service coverage ratio. Whenever we are going for project loan or term loan, each and every bank is prescribing own DSR ratio. Normally 1.5:1 is the DSR ratio prescribed. At the time of calculation, net profit after tax. In the examination they are giving before tax. So before tax minus tax you will get after tax. That is the you have to take. And at the time of interest on term loan means working capital interest we cannot take into this part. Only term loan interest only you have to take. This is about the question number 2. Bills discounting. This is generally a practical question they are asked. Bills discounting, practical question. Okay, based on some example I am discussing how the bills discounting we are doing in the banks. Bill of 1 lakh drawn by A on B for 3 months on 1st January 2021. Example I am telling. Bill drawn 1 lakh by A on B for 3 months on 1st January 2000. A get the bill and discounted from the bank on 16/2/2021. He went to bank and discounted the bill on 16/2/2021. How much rebate on bills discount or discount received in advance or discount charged by the bank on this bill discount? This is the question at the rate of 11.5% interest. This is normal question, practical question. Now 1 lakh I had taken from 16th February to 3 months means first April means 45 days. 1 lakh into 45 days into 11.5% divided by 365 days. 1 lakh is the bill amount, discounted amount. Period is 45 days into 11.5% per annum divided by 365 days. For these 45 days, the bill discounting charges or discount received in advance by the bank or discounting charges collected from the party 1418. This is normally practical question. Generally we are doing regularly in the banking. That's it. Now, fourth question, private limited company, maximum number of directors. This question there was exam question. Maximum means 15 directors. In a private limited company, maximum directors 15. Minimum to maximum 15. This is the exam question. Additionally, public limited company, minimum directors 3 and maximum 15 directors. Public, minimum 3, maximum 15. Anything beyond these 15 directors, the company, the board of directors had to take prior permission for appointment of directors beyond 15. That is the company. This is question number 4. Simple question. Of question number 5. Currency cess penalty for non-working of CCTV. Simple question. Penalty 5,000 for each irregularity, each failure, and repetition is there. Repeatedly it is not functioning. Then penalty will be enhanced to 10,000 rupees in case of repeatedly the same thing is happening. That's why first penalty 5,000. Repetition, repeatedly that is going on 10,000. This is about currency cess penalty. MCLR components. This question is very, very important for all the examinations. Marginal cost of fund-based lending rate. What are the components in this? Number 1 is marginal cost of funds. Marginal cost of funds of the bank. Negative carry on account of CRR. Negative carry on account of CRR means on the deposits, NDTL, bank has to maintain CRR with the Reserve Bank of India. On the CRR balances, we are not getting any interest from RBI. Banks are not getting any interest. So for that purpose, some amount they have to recover part of MCLR. That way, negative carry on account of CRR they are collected. Operating costs, bank operating costs are there that they have to recover under part of MCLR. And tenor premium based on the tenor of the loan, 1 year, 2 years, 3 years. Based on the tenor premium, the premium is going to be changes. So these are the 4 important components under MCLR. Now, negative carry on CRR calculation. How we are going to calculate negative carry on CRR calculations? Required CRR. What is the required CRR to the bank? Into marginal cost divided by 1 minus CRR. Required CRR to the bank into marginal cost of funds divided by 1 minus CRR. That is the, through this formula we can carry out negative carry on CRR calculation. Both are related questions. But this is MCLR is very important. MSME definition, plant and machinery calculation. This is the revised new definition as per MSME Act. What are the new definition for the plant and machinery? Micro enterprise, original cost in plant and machinery not exceeding 1 crore. Original cost, please. Small enterprise, micro, small, original cost in plant and machinery not exceeding 10 crores. Micro, 1 crore. Small enterprises not exceeding 10 crores. Medium enterprises, original cost in plant and machinery not exceeding 50 crores. This is the new definition as per the revised this. At the time of calculation of investment in plant and machinery or equipment, calculation will be linked to party's income tax return, or if it is a new enterprise, first year based on self-regulation or invoice value of the investments we can take. This is about plant and machinery investment calculation in micro enterprises, small enterprises and medium enterprises. This is MSME definition based question. 9th question, external commercial borrowing. External commercial borrowing, minimum average maturity period. The question related to minimum average maturity period. External commercial borrowing borrowed by a manufacturing company up to $50 million or its equivalent in a financial year. Minimum average maturity is 1 year. Manufacturing companies up to $50 million or equivalent For financial year, minimum average maturity is 1 year. ECB raised from foreign equity holder, minimum average maturity is 5 years. ECB raised from foreign equity holder 5 years. Now, who is a foreign equity holder? This is the definition I am given. Foreign equity holder. Sometimes they are asking, who is a foreign equity holder? This. Who is a foreign equity holder? Direct foreign equity holder with minimum 25% direct. In the borrowing company, directly foreign company is having direct share 25%. Indirectly 51%. Or the foreign company is a parent company, overseas company is a group company of the borrowing company. Then in all the three cases, that foreign company will be treated as a foreign equity holder for ECB purpose. This is very important, foreign equity holder. Several times, 4 to 5 in other banks also, this question was asked several times. ECB raised for working capital purpose or general corporate purpose, 10 years. Working capital or general corporate, 10 years. ECB raised for repayment of rupee loans availed domestically for capital expenditure. For capital expenditure means fixed assets purchase. For that, 7 years minimum average maturity. ECB raised for repayment of rupee loan availed domestically for purpose other than capital expenditure 7 years, 10 years. Sorry. Minimum average maturity is 10 years. So these are the minimum average maturity for 1, 2, 3, 4 occasions. 4 are very important from the examination point. What is the all-in cost ceiling for ECB? Additionally, this point I am discussing. So LIBOR plus 450 basis points. LIBOR or any other benchmark rate plus 450 basis point on the ECB all-in cost ceiling. This is about the question number 9. 3 to 4 and 4 to 5 examinations. This is most important question. Risk-weighted assets for personal loans, 100%. For the purpose of calculation of capital adequacy ratio, as each and every asset in the balance sheet are assigned by risk weights by Reserve Bank. Risk weight for personal loans, 100%. Other important risk weights I am discussing. Staff loans secured by mortgage or superannuation, 20%. This question was only asked in the exam. I am discussing. Staff other loans, 75%. Education loans, 75%. Regulatory retail portfolio loans, 75%. Loan up to 7.5 crores. Commercial real estate, residential housing, 75%. Commercial real estate, 100%. So these are some of the very and most important from the examination point. 11th question, housing loans, LTV, loan to value ratio. This question was also there asked. Loans sanctioned on or after 16/10/2020 and up to 31/3/2022. RBI notification dated 16/10/2020. What is the risk weighted assets? Housing loan. LTV ratio, loan to value ratio less than 80%. Risk weight is 35. LTV ratio less than 80%. Risk weight is 35. LTV ratio above 80 and up to or less than 90. Risk weight is 50%. Risk weight 50%. Earlier that loan up to, earlier prior to that also loan up to 75 lakhs. Loan up to 75 lakhs, LTV ratio is less than 80, risk weight is 35. Other loans 50% prior to this loan. 16/10/2020 prior to this rate, loans up to 75 lakhs, LTV ratio less than 80, 35. Other loans 50%. Loans, housing loan sanction prior to 16/10. This is 11 question. What are the 5 basic rights for banking customer laid down by RBI? Right to fair treatment, right to transparency, fair and honest dealing, transparency, fair and honest dealing, right to suitability, right to privacy, and right to grievance, redress and compensation. In several examinations, this question was repeating basic rights of customers. Right to fair treatment, right to transparency, right to suitability, whatever you are selling products, that must be suitable to the party. You have to maintain customers' information confidently. Right to grievance redress and compensation to the customer's policy. This the same question was also repeated in PNB 4 to 5, 21 February 2021, 21 to 2020. Question number 13, NI Act section 143. This is the amendment, latest amendment 2000. NI Act section 143 states that the court, lower court, can order interim compensation to the complainant, to the bank, during the pendings of the case in the check dishonor cases. That the compensation amount shall not exceed 20% of the amount of the check amount. So after filing our case with the court, banks, the court, lower court can immediately give an interim compensation 20% of the check amount. That is section 143A, most important. Then 148, section 148 of NI Act. So against this order, party may challenge and may go to appeal to higher court. Higher court. The appellate court also, the higher court may order the appellant to the drawer of the check to deposit 20% of the lower court order. At the time of entertaining this appeal, higher court will insist to deposit 20% of the fine compensation awarded by the trial court, lower court. This 20% normally party had to deposit within 60 days from the date of the order. This 20% party had to deposit within 60 days. In genuine reasons, they will give additionally further 30 days. This is the section 143A and 148. Most are important sections as of today because these are the latest amendments. Then they are asked. Question number 14, priority sector lending. Lending by banks. Banks are lending to NBFC. NBFC onward lending to customers. This is the question. Banks credit to registered NBFCs for onward lending will be eligible for classification as priority sector under respective categories. Agriculture, on lending by NBFC for term lending component under agriculture will be allowed up to 10 lakhs for borrowing. Micro and small enterprise, on lending by NBFC will be allowed up to 20 lakhs for borrowing. Housing loans up to 20 lakhs for borrower. Agriculture 10 lakhs for borrower. MSME, micro and small 20 lakhs. Housing 20 lakhs for borrower. Priority sector lending, lending by banks to NBFC. NBFC for onward lending to agriculture, small, micro and small, and housing. LFAR, long form audit report. This is the September 2020 amendment, latest changes. Copy each of the LFAR, long form audit report, submitted by the bank branch statutory auditor. This is certified, submitted by the branches, in the branches after completion of March 31st statutory auditor. After submission, along with the relative agenda note, together with the board's views or directions about the consolidated LFAR, should be forwarded to the concerned senior supervisory manager in the Department of Supervision RBI within 60 days from the date of submission of the LFAR by statutory auditors. After submission of the consolidated central statutory auditor, consolidated LFAR to the bank, that along with the relative agenda note, compliances, and along with the board's views or directions about the LFAR compliance should be forwarded to RBI within 60 days. This is the latest amendment. Earlier, such type of submission of LFAR to RBI, it is not there. This is from September 2020 onwards. This change has been taken place. This is very important. 16 question. Aggregate sanctioned limit. Aggregate sanctioned credit limits. This is applicable only fund-based limits. Specified borrower from the banking system means, specified borrower means a borrower who is enjoying 10,000 crores and above from the banking system 1st April 2019 onwards. Any borrower enjoying 10,000 crores and above, he is a specified borrower to the banking system, entire banking system. Now, beyond this 10,000 crores, normally permitted lending limit. Any borrower, any specified borrower, any incremental borrowing beyond 10,000 crores, out of incremental borrowing, 50% only he can be allowed to borrow from the banking industry. Remaining 50% of incremental lending, he had to borrow from the markets. The additionally permitted 50% above the 10,000 crores attracts additional provision of 3%. And above 10,000 crores, any normally permitted lending limits are there. In that above limit, additional provision is 3% and additional risk weight is 75%. Above 10,000 crores, after specified borrower crossing the limit, if any banks are sanctioning the limits beyond 10,000 crores and above 10,000 crores limits, normal provision plus 3% additional provision on the above 10,000 crores advances, 10,000 crores above limits, and additional risk weight is also 75% over and above the applicable risk weight. Normal applicable risk weight plus 75 points, you have to add more risk weights. This is the about the specified borrower, aggregate sanction credit limits, fund-based limits, and normally permitted lending limit. This is the Reserve Bank of India guidance. This is applicable to all banks. Break-even sales, a practical question. This paper in this IOB 4 to 5, most of the questions based on practical questions they are asked. Now we don't know exact figures, but generally we'll discuss BEP in units. Fixed cost by contribution per unit. For break-even point calculation in units, fixed cost by contribution per unit. BEP in sales rupees is equal to BEP units into unit selling price. BEP unit into unit selling price. Contribution is equal selling price per unit minus variable cost per unit. Selling price per unit minus variable cost per unit. Okay, then margin of safety sales is equal total sales minus break-even sales. Total sales minus break-even sales. Normally, BEP at lower level is best, margin of safety higher. Margin of safety sales means profitable sales. On margin of safety sales only we are getting profit. So from this analysis we have to learn that BEP level of sales achievement at lower level of sales. If any company is achieving the BEP sales at 30 to 40% of sales, remaining 60 to 70% of sales are cushion sales, margin of safety sales or profitable sales. This is required more. This shows the strength of the project. This is about break-even point, question number 17. LRS, liberalized remittance scheme. Very important question for all the scales. Maximum amount that a person individuals can remit outside India $250,000 by disclosing the purpose in a financial year. Maximum $250,000. Now what is the question there? Whether this is applicable to sole proprietor also. Yes, it is applicable to sole proprietor. And also the guidelines are, in a sole proprietorship business, there is no legal distinction between the individual owner and as such the owner of the business can remit up to US dollar 250 this. For prohibited items under this scheme, prohibited items, purchase of lottery tickets. For the LRS we cannot allow the remittance. Purchase of lottery tickets, sweep tickets, stakes, margin calls to overseas exchanges, remittances for trading in foreign exchange abroad. In some banks, they are asked this question also. In some banks, LRS, what are the items prohibited for remittance under LRS? This is also lottery tickets, sweepstakes, margin call to overseas exchanges, remittance for trading in foreign exchange. So this is overall important question. This is SNRR account, special non-resident rupee account. Any person resident outside India having business interest, business relationship in India may open special non-resident rupee account with authorized dealer. Debit credit in this account shall be incidental or commensurate with the business. So only debit or credit related to business only allowed. Normally the tenure of the account in no case should not exceed 7 years. After 7 years, the business relationship is going on, business interest is going on. They have to take prior permission for continuation of beyond 7 years with the RBI approval. They have to take approval for continuation after 7 years. These balances under SNRR are eligible for repatriation to his country. That is the 19th question. Question number 20, cost of funds calculation. The entire question paper is very tough. Practical questions they are asked more. Cost of funds question. This is IFFB 4 to 5. Cost of funds calculation. How we are going to arrive the cost of funds in our bank? This is the question. Now we don't know exact figures, and hypothetically I am discussing this problem. Example, weighted average cost of funds of the bank. Example I am discussing. Amount in crores. Capital of the bank 10,000 crores. Capital. Example this is. Current deposits 25,000 crores. Current. Savings deposit 50,000 crores. Time deposits 1,50,000 crores. Other borrowings or market borrowings 10,000 crores. This is the total liabilities of the bank is 2,45,000 crores. Example, this is I am taking a hypothetically this example for understanding purpose I am discussing. Now 2,45,000 crores is the bank's total liabilities. Out of that you have to calculate first weights. 2,45,000 crores is equal to you have to take 1. 10,000 crores is equal to how much? 10,000 crores divided by 2,45,000 crores. That is 0.04 weight. In 2,45,000 crores, capital weight is 0.04. Current deposits 25,000 divided by 2,45,000. The weight is 0.10. 50,000 crores savings deposit. Weight is 50,000 divided by 2,45,000. 0.20. 1,50,000 time deposits. Weight is more this. More. Weight is more this. Weight more. 0.62. This is there. Other borrowings 10,000. Weight is 0.04. So total weight had 2,45,000 converted into 1. Accordingly derived the weight. 10,000 by 2,45,000, 25,000 by 2,45,000, 50,000 by 2,45,000, 2,45,000, 1,50,000 by 2,45,000, 10,000 by 2,45,000. This is the weight. Now, this cost also had taken a roughly. This is a rough average basis. Cost of capital of the bank 11%. Current deposits 0 because we are not paying anything else 0. Savings average cost of savings is 2.9. Average market average I have taken. Time deposits on an average all banks 5.7. Market borrowings around repo margin standing facility rates around 4 to 4.5. I had taken 4.5. This is the other market borrowings. Now weighted average cost of funds is equal to 0.04 into 11, 0.44, 0.10 into 0, 0, 0.20 into 2.9, 0.58, 0.62 into 5.7, 3.53, 3.53, 0.04 into 4.5, 0.18. Add it all the 0.44 plus 0.58 plus 3.53, 0.18. The average cost of funds of the bank is 4.73. The bank is incurring more interest cost is on time deposits. and borrowings also. This is so the average cost of funds is this. This is a rough example I had taken for understanding first. In the examination, what they had asked, we don't know. But this is in this manner, you have to calculate the cost of funds. In the examination, they may give one or two items also. Not they cannot give more items also. They may give time deposits and savings also, or they can give full amount also. In this manner, this question was also asked in so many other examinations also recently. So overall, the IOB 4 to 5 question paper is a little bit tough and practical oriented. Dear viewers, 1 to 20 questions I am presenting today. In the future videos, I will present remaining questions also. Now, please subscribe to our YouTube channel for getting our regular JAB, CAB and promotional exam videos. I wish all the best for the participants, for all the viewers. Thank you very much for all viewers.